Good afternoon, everyone. I am Angeline Fraser-Giles, the Executive Director for the National Network for Justice. And I'm very excited today to have a expert as well as a friend of mine who will be talking about what you need to know as a nonprofit, all about the financials when it comes to dealing with nonprofit management. Subrina Wood is the Senior Tax Manager at Calibre CPA Group. She has 33 years of public accounting experience with extensive experience in taxation, asset management, and tax return preparation training for several clients, ranging from nonprofit organizations, banks, trust funds, investment firms, and public accounting firms. And as I said, she is a friend, and I call upon her whenever I need to ask her questions about taxes because she knows it all. And so I'm going to turn it over to Sabrina. Welcome.
Good afternoon, morning, or evening, everyone, whatever you're listening to this. Hi, I am Subrina Wood, and I am a CPA here in Maryland. So I wanted to give you a brief overview on what it is you need to know about 990s and finances and things like that when you are running a nonprofit. Now, I am familiar with NNJ, of course, through Angeline, and so I know that a lot of you may not have complete accounting staffs, or you may not have, a CFO. So I want to talk about what's really important for you to understand, because you may be in a leadership position with your organization, and though you're doing the good work and you're doing the stuff that we want people to do for us, you are the boots on the ground, you still have some financial responsibilities. And I want to make sure that you don't get in trouble or get concerned or get upset or crazy trying to figure out all these things that you need to do. So what I'm going to do is give you a brief overview of 3 areas where you need to understand. You don't have to know it. The accountants are going to know it. And if you ever need an accountant, please feel free. Angeline, I'm going to let you, they can call me. They can call me or they can email me. Oh my God, what have I just said? But yes, you can. Yes, you can. Please do, because one thing we do really pride ourselves on at Calibre CPA Group here in Maryland is that we want to be the people that help our clients. I mean, we the value added. That's a brief commercial. But we do. We really want to make sure that you guys do the job that you're supposed to do. And our job is to make sure that you can do it without worry about the IRS and states coming after you because you didn't file something. So
Yes, we don't want that to happen.
we don't want that to happen. So call me if you have a question. Always can, and I will make sure that you have a handout that I prepared for you. So everything I'm going to talk to you about right now is going to be available in a handout from Calibre, and we also have my contact information on it. So if you do have a question, please, send us an email. And believe me, no question is too small, silly, stupid. Please just ask the question. Okay? So
Okay.
with that, you want to get started on this, Angeline? So you want to start off with some questions for me, or do you want me to just plow right into my presentation?
Why don't we start with your presentation and then we'll go into questions based on our time frame.
Okay. Okay, so first of all, I said there are 3 areas that you really need to, to be conscious of when you're in a leadership position of a nonprofit, okay? For accounting purposes, you need internal accounting and this full set of financials, and I'm going to go over that. The second part is you need to know how to present or get prepared the 990. That is the IRS form that you have to file every year. Remember what I just said, every year you have to file this form. It's called a Form 990 with the IRS. So you'll need accounting for that. You also have some state compliance requirements, and you're going to have those requirements if you solicit or if you fundraise in certain states or in any state. So there's that. So whatever states you're created in and any states that you branch out into, you may have some state compliance, and they're going to need your numbers. So that's why you need different sets of numbers for all these different things. So you need them internally, you need them for the IRS, you need them for the state. Okay? That's, are we nervous? No. So one thing you need to know, they're pretty much the same numbers. So they may be in different forms, but it's the same numbers, okay? So don't get too upset about that. So let's start with internal reporting, all right? First thing I want everyone to know is that when you are in a position of leadership and you start a nonprofit, you have to be able to get the numbers Okay, you've got to track them. You've got to be able to pull them out of software or the accountant, and you have to be able to present them to somebody. So the first thing you want to do is make sure that you can do what's called ad hoc reporting. So if I come up and say, hey, listen, I would love to give you $500,000 after you get up from the floor, you would be able to give me a set of accounting, right? So you don't want to have to make that person wait because they've got 500 grand that they want to give you. So you want to be able to give them an accounting right away. That's called an ad hoc accounting. So you want to make sure that you've got some kind of software that you can go to the software and you know how to get the accounting out of the software. Or that you have an accountant that is responsible enough and responsive enough that they can give you a set of financials when you ask for it. So you may have, a bookkeeper or an accounting service. So if they can't get you accounting when you ask for it, that's the first red flag. So I think, Angeline, that might have keyed a question for you.
Yes. So what's the difference then between a bookkeeper and an accountant? Because the bookkeeper which one is a point in time? There's a difference between the two. So folks need to know what the difference is.
Well, the big difference is money. But so I will say that there's a third thing. So you have a bookkeeper, you have an accountant, and you have a CPA. All right, and I am a CPA, but I'll tell you, I'm not a bookkeeper. The bookkeeper is the person that actually will do like the books. They are actually the ones that you're going to give your records to, you're going to give your bank statements to, you're going to give them the revenue coming in, and they're going to take it and they're going to input it into the software, the spreadsheet, or whatever it is you have, and make sure that everything tallies up. That's the bookkeeper. They are not giving you anything else. They may be very helpful though. I mean, bookkeepers, I don't want to slight bookkeepers. I've had some fantastic bookkeepers. But I'm just going to go with what I think you're asking me. A bookkeeper is somebody that's going to make sure that they're putting in all the information for you and they're giving you the raw data that the accountant needs to give you a full set of financials. Now, the accountant is the person that's going to make sure what we say, they're going to compile it. So when I say a compilation, they're going to compile a set of financial documents for you. They're going to give you the income and expenses. They're going to give you the balance sheet. They should give you a statement of equity, like where you were last year compared to where you were today of your net assets. And then they're going to give you maybe some notes on the financials. That's called a complete set of financials. So
okay, can you repeat that?
I can. It's going to be your income and expenses, otherwise called your statement of activities, your position, your statement of position, where you are at the end of your year, which is called your balance sheet. There's another statement called your cash flows, looking at how much cash is coming in, how much cash is going out. And there's a change in equity, where you were at the beginning, where you were at the end of 2019 versus where you were at the end of 2020, how you got there. And then you have notes to the financial. So they will tell you if there's anything crazy, what kind of accounting method we're using. They will explain all these things so that you're comparing apples to oranges. So when someone's reading the financials, you're like, okay, is this, what method of accounting are you using? Well, what did you assume when you were doing depreciation? Anything like that. Is this tax basis? Is this cash basis? Stuff like that. So that's all going in the notes.
So let me ask a question.
Mhm.
In terms of cash flow, the cash flow change and forecasting, is the accountant able to provide you, let's say your payroll, there are fixed things your payroll, you might know what your membership database costs each month. Is the accountant able to forecast based on how much money you currently have, how much cash flow you're expending each month to tell you where you'll be at the end of the year or at any time, any point in time in the year?
Now, that is basically what you're talking about budgeting now, which is the next thing I have here. So for the accountant to do that, they're going to have to work with the organization because, they would be able to provide you with the budget. But generally, we do that with someone who is really keyed in with the organization and it knows, what kind of expenses, what you plan on doing. Because if you've got certain programs that are coming up, so if I'm just looking at your accounting, and I don't know what your strategy is for this year, I'm not going to be able to forecast for you how much money you're going to need. So, I need someone from the inside to tell me, okay, we've got 2 conventions, we've got fundraising coming up, and I'm going to bring on some interns. Okay, all right. Oh, okay. Well, let me give you what I think your budget is going to be. Now, I can help with that, but that budget sign off is something that your board is going to go over, your accountants are going to go over, but I can definitely help you and put it in a format for you. But whether you're going to say, yeah, we're going to spend this much money, or whether we have this much money or not, that's something that the board needs to make the decisions on. So they will give me parameters like, we only have this much money and we think we're going to get $1.5 million in, and this is what the budget's got to be. This is how much we can spend. Like, what makes sense? And then I can say, well, you better stop traveling or whatever, but the accountant coming up with those numbers and telling you what the cash flow is. Remember all the time, the financial statements belong to the organization. The accountant is just hired help. Okay, that is not our set of financials. They are your set of financials. So you're telling me what you think is going to happen. I will give you the best plan about it, but you've got to input information to me. And based on what you tell me, I'll tell you, you have enough money, you don't have enough money. But I can't make that decision just based on, what I think. You got to give me a lot of information.
Right.
So that's budgeting. And that's something that, you really have to sit and think about it. It's hard when you're a new organization to come up with a budget because you don't have a history of like, okay, this is how much I usually spend. This is when I usually get my money in. So all these things really have something to, to help with that budgeting. When you have like 2 or 3 years under your belt, I get the bulk of my money in, on the, the fourth quarter of fundraising. I know that I'm going to get mostly 2-year grants. You don't know these kind of things until you've got a few years under your belt. So it's kind of hard to do those first budgets. But, you do your best, you get as much information as you can, and you try to be reasonable, what a reasonable person would assume. So so that takes care of that budgeting. I hope that answers your question, Angela?
Yes.
Okay.
Definitely. Thank you.
So another reason why you need financial reporting is for the audit. Now, it depends on the state that you are located in, whether you have to have an audit or not. So state regulations differs. A lot of times, once you have $1 million in assets or receipts, you have to have an audit if you're a nonprofit. And that goes by on a state-by-state basis. Some states are very strict, some states don't care. Delaware is one of those states, you can just go to town. And that's why people love to form things in Delaware. And I will double check that, but I believe that Delaware doesn't have a threshold that keys in an audit. DC, I believe, is $1 million or $1.5 million, and you're supposed to have an audit. Or Virginia, I think, is also like that. I'm a little, I don't quite know this because most of my clients are usually in the $5 to $10 million range, so they all have to have audits. If you're going to come to a firm like mine, first thing we do for you is an audit. Now, you can always do an audit, whether you have an audit. Some people think they have to have an audit. I think it would mostly depend on who your funders are. So a lot of funders will only talk to people that have, they want audited financials, a third-party outside audit by somebody that is, like my firm, coming in and giving an opinion. And what the audit does is that we will go in, look at the financials, and we give an opinion on whether those numbers are truly stated under general accounting principles. So we're giving an opinion. The audit just says these numbers are good. As far as we know from our review, these numbers are true and you can bank on them. That's what the audit does. So that's why you see funders saying, do you have audited schedule? What we do not do is look for fraud. So a lot of people think, oh, well, I've got an audit, so everything is good. No, we're not looking for that. We're looking just to make sure that your numbers make sense, that you are doing things according to general GAAP, what we call GAAP, generally accepted accounting principles, and that, nothing looks untoward, crazy, or out of whack. We'll look at things and say, okay, this doesn't make sense, it's a red flag, but we are not going into what we call a forensic audit where we are looking for fraud. So don't get comfortable thinking that because I have an audit, everything is copacetic. You still have to take a look at that. So don't let that get you. You also are doing the internal reporting so that you can do the tax reporting, all right? And that is something that everyone has to do, no matter how big or small. Now, I'm going to move into another area with internal accounting before we go on to the tax accounting, and that's internal controls. So I just talked a little bit about whether you have fraud or something going on. It doesn't even have to be fraud. It can just be sloppy bookkeeping, because you know, you may not be intending to say that, other than my numbers are crazy and wrong, but you know, if you're not doing things consistently and you don't have procedures, your numbers may not be as good as you think they are. So one of the things I always want people to remember is that as soon as you can, as soon as it starts, and it comes from the top, you want to make sure that you have what we call internal controls. An auditor, when they come in, is going to test your internal controls. Internal controls mean, is there some procedure where if you get in money from a grant, who has control of that money until it gets into the bank account? So you have to have some sort of internal control, like, you know, okay, Angelin's got the check. What control do you have in place to make sure that Angela is not going to run off to you know, to Cuba with the money? So so she's going to call Subrina and away we go. Now you want to make sure there is some sort of internal controls, there's some documentation, there's a procedure that you follow every time money comes in and when money goes out. Okay, so we want cash management, internal control. You want two people signing off on something. Like if Angela gets the check in, somebody else has to record that check. She's not bringing in the money in, you know, putting in the thing and taking it to the bank. You were someplace, there's some other person that's doing something.
So
Approvals.
that is a very good place to stop, because I think that what you're saying is very, very important, particularly in light of where we are now with COVID-19 and people working so
Remotely.
remotely. I'm very, very remote. So getting a check in requires a couple of things on our end. And I think that for folks who are trying to work remotely and do this and get a check in, making sure that you have those controls in place, and who actually is putting to, is it a policy that you suggest that organizations have? Is it just a quick document, an agreement between the treasurer of the organization and the rest of the board and the executive director, or the CEO or COO, or how do you suggest people put those mechanisms in place?
I actually suggest that people have what we call the employee handbook. There should be some documentation of what someone does. And it shouldn't be like Angeline takes a check and then no, it should be, you know, it should be written so that if everybody gets hit by a bus, somebody knows what to do if the check comes in. If you're not there, somebody knows what is the procedure. What I do recommend is that you work closely with your bank. Your banker is your friend, and they have a lot of software apps right now, which would make this much easier for people to do things remotely and to do things with sign-offs. I live in Bethesda, Maryland. I am a board member of an organization that's in Washington, D.C. Right now during COVID, and even when I'm really busy, it's very hard for me to come from Bethesda and get over there and sign checks, because you know, we have 2 signature procedures for checks over a certain amount. So, you know, we have now gone into a software, it's called bill.com, where we have a second sign off is required. I can do it remotely, but, you know, I get all the documentation and the PDF to see what this is for, and then I can sign off without having to get in my car, go down to DC, park, go upstairs and sign off on the check, which is what we have been doing. It was fine when I was in DC, and even that was kind of a strain, but you know, so there are things that we can do. We do bank reconciliations remotely. Now, I would recommend that everyone do their bank reconciliations every month. I've seen places where they hold off all the bank reconciliations till the end of the year, and then they're doing 12 of them. So if something went wrong in April, and here we are in January, and you're just doing the bank recs, I don't want to be there for that. But oh, what happened to the $50,000? Oh my God. So you want to make sure that you're doing things contemporaneously as much as you can, and that it gets to be wrote, and that people in the firm or in the organization expect this to happen, because that is the surefire way that you can stop fraud. When people know that you're lackadaisical, people know that you're lazy about it, that you don't always follow the rules, you don't always get the second sign off, that's when you have problems in a firm or in an organization. And I'm not saying this from, this is what I've, I've experienced it. When, firms get just lax, people know. They're not going to check every month. She's not going to do the bank rec until, 5 months. I can take this money and put it back. And that's what usually happens. Somebody does something, and it's not that they're going to steal the money. They need the money. Something is desperate. It's driving them. They will take the money for a while and try to put it back, and then stuff happens and, it blows up. And this happens a lot, unfortunately. So this is why I don't want to mention it, but when people have strain of credit and people owe $500 million to people, you need to know who they owe it to, because it can make people do things. So, so we want to make sure that you document everything. And we do have a template that can help you with this, like the things that you should document, like how to deposit money, how to do things remotely. That's a new one. That's not in, I'll tell you right now, that's not in the template, because that's really come up recently. But it does go through all the different things that you need to do for internal controls for vendors. You want to vet vendors. You want to make sure that people just can't say, oh yeah, we got this vendor named Angelina and Subrina. And then you're like cutting checks to Angelina and Subrina, because that's another way people steal money. They put up fake vendors. So you want to make sure that you have a vendor procedure, you have a bill paying procedure, you have an approval of checks of large amount procedure, and that you have a cash management procedure. So those are internal controls that will help you make sure that the information that the bookkeeper is now putting in and then giving to me, the accountant, to do a budget for you is all correct. So like I said, handbook, employee handbook. And the other thing you want to document are policies. You want to document vacation policies, things like that. You want to make sure that everyone has to take a vacation. I know that sounds really funny, but you'll have people that don't take vacation. That's the one we look for, the person that will never leave that office.
Yeah. Well, nonprofit during COVID and the work that many of our members do, yeah, challenging to take a vacation, but it's necessary.
So sometimes what we would do, even if you have people that don't take vacations, we actually would shut down their computer for a week.
Wow.
Yeah, because usually if something funny is going on, they will have to do something to maintain the funniness. And so you shut down their access for 1 week, even if they won't go on vacation. It's like, fine, you can be here and work, but you're not working on this computer. I'll tell you that. So we're tough in the financial world. We are tough. So we mandate vacations. Everybody has to leave at least for 7 to 10 days. So that's internal reporting. So I'm going to jump now over to reporting to the IRS, which is the big thing. That's the big one that makes everybody crazy. As soon as everybody gets letters, everybody from the IRS, everybody freaks out. But you have to remember that you're in a very special world, because you have tax exempt status. So to maintain that tax exempt status, you have to report to the IRS what you've been doing. The reason why the IRS gives you tax exempt status is because you're doing things for society that the government can't or won't do. So in lieu of making you pay taxes on any money you earn, because you're doing these good things in social justice, save the whales, or, whatever it is you're doing for society, education, scientific, the IRS says, okay, since you're going to take care of that and I don't have to, as the federal government or the state government, I'm going to give you a tax exempt status, go for it. So in order to maintain that tax exempt status that you've gotten, you have to do certain things. You have to file the Form 990. Okay, so now one of the first questions is, when do I file? If you're brand new and you think to yourself, I think I want to have a tax exempt organization. Happens a lot. Everybody jumps up and says, I'm going to form a charity and I'm going to do all this stuff. And they go to the IRS and they get an EIN. The clock starts ticking as soon as you get that EIN and you tell them, I'm going to file something. So you have to make sure that you don't ask for things. Don't start setting up corporations or getting EINs and all this stuff until you're really ready to start rocking and rolling, okay? Because the IRS thinks as soon as you ask for it, okay, year one is starting. You have to file something every year. And okay, I'm gonna go through this really easily. There are 3 different forms that you have to file, you can possibly file as a tax exempt. It's called a 990N, which is really just a postcard. You just go on to the IRS website, you give their name of your organization, your name and address, and then you say, I never have more than $50,000 in gross receipts in any, and they say, fine, are you in existence? You say yes. Okay, so that's a very small organization. You have to do this every year. I would advise you to do it every year. You have to do it at least once every 3 years. Don't get into that trap. Please be consistent. Just file the 990 in every year. Don't come to me and say you lost your tax exempt status. That's what's going to happen. You're going to forget. All right, so that's the end. Only if you have less than $50,000 in gross receipts, less than 50,000. All right, then there's the 990 EZ. EZ because it is a smaller than the normal 990, but it's larger than the N. So it's about 4 or 5 pages. You can file this form if you have less than 200,000 in gross receipts and $500,000 in net assets. Dollar over in either one, you're out of the park and you got to file the full 990. Okay, so 201,000 in gross receipts as I fool, you're filing the full 990. 990 over 200,000 in gross receipts or over 500,000 in net assets. So that net assets is what's on your balance sheet. So if you're not sure, you would look at your balance sheet. If you see $560,000 as your net assets, you're filing the full 990. Okay, so they are due in the 15th day of the 5th month after the year end. Generally, most people's year end at December. So you would be filing May 15th. But if you are in June is your year end, so I have a lot of educational organizations, they file their year end is in June, you will be filing that in November 15th. So it's always 4.5 months or the 15th day of the 5th month, however you want to say it. So when you're doing the 990, and I like to tell people, the 990 is your friend. It is a public document and it's free advertising. So I have a lot of organizations that put the least amount of information they could possibly put on their 990. You know, it's like, yeah, the 990 wants to know, like, what are you doing? Who are you? You know, how are you doing these things? So if you're out there to raise money and to raise funds, why wouldn't you use this thing as a free advertising? Because I'm going to talk to you a little bit later as to who can access this 990. So I always advise my clients, you know, get it all out there. You can tell them what you're doing. I mean, you know, put it on there. This is all the stuff I did. But I have a lot of organizations that are very closed-mouthed about things, and this is usually organizations that are they're a different type of organization from what, you know, people that are in NNJ are. So they kind of play a little close to the vest. But one of the things that you do have to make sure you do is put in your mission statement. So you should have a board-approved mission statement goes on this 990. Now, what you think you're doing, now what you've been telling people you're doing, what you actually have as a mission statement that the board looked at and they all agreed and said, yes, this is what we're doing. And this is what you actually put on the documents that you sent to the IRS. You said, this is what we're doing, okay? That goes on your 990. The other thing that goes on your 990 are your program descriptions. That's the one that I'm saying most people just say things like, I had a convention. Like, no, I had a convention of 300 people and this is what we did at it and all this stuff happened and everybody, you know, put it all down there because people are looking at this 990 to see if they want to give you money. So why would I give you money if you told me I had a convention? I'm like, about what? How many people were there? What did you do? Like, oh, so, you know, so make it so that people can find you and that, you know, when people go to search for you and they're looking for keywords, okay, let me repeat that. When they're doing a keyword search of your 990, convention is going to pull up 50,000 other 990s. So if you're looking for money, be specific about what you do, okay?
So basically what you're saying is we should be telling a story in our 990. Maybe if we thought about it a little less about numbers, if we're not really into numbers, we think of it more as a story because all of our members are good at telling their stories, right? Why they got here, you know, what drew them to this work that they're doing. They're very good at that. So maybe if we phrase it that you're telling a story about you.
Yes.
It's less about it's less about the numbers.
The numbers are on the form. The 990 is a catch-all form. It is for about 23 different types of 501c organizations file the same document. So there are a lot of pages and it is very intimidating. And the numbers are the numbers. The numbers that you just did for the internal and for the audit and everything else are going to wash over and they're going to be reported on this return. And that's my job. But the 990 is so much more than that. And it is one of those documents where you can put in a lot of information. You can tell your story. And when you give that to a stakeholder, or when you give that to a private foundation that's going to make a grant, you know, and they've got a pile of, you know, here are financial reports, here's who I'm going to try to give money to, let me look at their 990, tell your story, you know, that's what I say. So make sure that your program service accomplishments description are current. I've seen people put the same thing down, you know, that convention that I just talked about, it was done in 2015. They got the same numbers. No, I'm like, did you have a convention last year? I have to question people. Wait a minute, I know this is not, you didn't have it in Wichita last year, it was in Tulsa. What are you talking about? So make sure it's current. If you have any new programs, put them in. If you have any changes to the programs, put them there too. So just make sure that it's, you know, it's telling your story. One of the other things that you have to do besides tell your story and besides tell your numbers, you also have to tell the IRS that you are governing this organization correctly. Again, that falls into your tax exempt status. And when you do the 990, I want you all to write this down right now, wherever you are, get your pen and write down page 6. Okay? Don't call me and tell me I didn't tell you to look at page 6. So got to look at page 6. If you are in a leadership position, if you are a board member and they tell you, hey, you know what? The accountant said review the 990 before they file it with the IRS. The first thing I would do is look at page 6. Okay? This is your governance page. And it's asking you 2 things. IRS has certain governance and policies that you have to have in place. And then they have governance and policies that they would like you to have in place. On page 6, section A are things that they have to know. So they want to know, how many voting board members do you have? All right, look at that. Make sure that the accountant got it right. Do you have 25 board members that vote? Not how many people are on the board, you know, because they've been there so long that they're still on the board. I mean, do they have a right to vote on things? That's who gets on this 990, just the voters, okay? Do any of them get compensation? Because if they do, then they're not independent. So you want to make sure that these definitions that you see on this governing board, body, and management section, that you understand it and that they are correct. Because that's what I'm counting on Angeline to tell me this is right. I don't know. You know, somebody's giving me, oh, I got 4 board members, and I go and look in your, you know, your website, and there's like 25 people listed there. I'm like, oh, you know, what is going on? So you know, you want to do that. Do you have a management company that's actually running the organization instead of somebody else? So sometimes people hire a management company or a PPO or something to run the thing for them. So you're going to put that down. You know, do you have any significant changes to your governing document? Maybe you changed what you were going to do. You had one mission and now you're going to change the mission, or you decided you were going to expand the board, or you decided you were now going to have different rules for taking somebody off the board. You have to add that in here because the IRS will update what you said you were going to do, how you said you were going to do it. And so instead of filing a whole nother set of documents to say, this is how we operate now, they just said, just put it on the 990, tell us this is the new change, and we'll add it. Okay, so you want to make sure you do all that. Then they ask you all different kinds of questions about your governance. Okay, do you have, do you contemporaneously document your meeting? Do you have a committee that works with the audit? Do you have officers who can't be reached at a mailing address? All these kind of things they want to know. That's the things that you have to answer. Then there are the things that they would like you to have in place. You can say, no, you don't have these things in place. It's not mandatory, but the IRS would like it if you did have this. Such things as whistleblowing policies. Do you have one? Do you have a retention and destruction policy, which is very important, especially right now? When do you get rid of records? How long are you supposed to keep records? Do you know that? If you don't know that, do you have a policy that you could look up in that employee handbook that I mentioned at the beginning that says we got to keep certain records for 10 years, okay? So you should know that, and make sure your staff knows that so they don't just start taking archive boxes and throwing them out to which we've had this happen.
Ready.
Hi. This is why the banker is your friend, because it can always replace statements, but you should know what it is you need to keep on hand and what and how long you should keep it, especially tax returns you keep forever. Okay, my world, you keep it forever. Okay, so that's policies and board governance. So make sure you know page 6. I'm not going to go through the whole page, but there is one thing that you really do have to answer, and that is the method of reviewing the 990. The IRS wants you to write a paragraph, or just a sentence. Who reviews it and what do they do? Okay, and then they want to know if the board gets a copy of the 990 before it is filed. So those are 2 questions that everybody should know the answer to. I know how this thing is reviewed. Okay, it goes to Angeline, she looks at it, outside accountant prepares the return, Angeline reviews the return, then she gives it to the board and they sign off on it. Great, you write that in there, but you gotta write something as to how this thing is reviewed. And then it says, did you send all copies to the board members before it was filed? If you don't, that's fine. Sometimes I have organizations that have 200 board members. Please, God, don't send it to all 200 board members because we will never get that thing filed. So, you know, they may just send it to the people that are voting. And they only ask you if you sent it to them. It doesn't say, did they review it? Just send it to them. It's on them to take a look at it, okay? So,
I want those CYA moments. So you can't say that you got it from the accountants and then you, as the executive director or the COO, sent it to the board. CYA, just send it.
Just send it to the board, you know, just, and it used to be that they actually had to send a paper document to them, but right now you can actually send them, you should send them like a PDF copy of it so that they don't have to like open a link. But, you know, you send them the PDF of the return saying like, here is your copy. We are going to file on the 15th of October. If you have any questions, you better get it done over there before that. And a lot of times they won't even answer you, but they're gonna hope that the people that are in that other paragraph, so Angeline reviewed it with the outside accountant Subrina and and maybe like the, you know, the treasurer of the board, they're gonna go with, okay, that's how we reviewed it. I don't have to really look at it. But if you are on the board, it is up to you to really take a look at that return. You may have questions. Even if you are not a financial person, you should understand what you are reporting to the IRS and take a look at page 6 and make sure that you understand what's going on there. Okay, that would just make me happier. So now, you know, when you're going to file the return, you know what you're going to file, and you know sort of what pages that you really kind of should look at if you are a board person or if you're, you know, the executive. But one of the things I want to talk about also now on this 990, and we talked about telling the story, and we talked about, you know, making sure you know the policies, but now we're going to get into the numbers. Okay, just hang on with me, stay with me. We're going to get into the numbers. So what you want to do, and this is all going to be in the handout, the board and the leadership has to understand what the numbers are saying on the 990. And I'll tell you why in a minute. And so when we usually do returns with people, my job as a senior manager is to sit down with the organization and make sure that they are comfortable. Okay, I will come to the board meeting to discuss the return. Usually we talk to them before we even start doing the return. Like we come in at the beginning of the audit, tax will come in and say, here's what we want to talk about. What did you do last year? Were there any problems? You know, I'm looking for a bunch of things. I'm having a conversation because a lot of time the numbers don't tell the whole story. There may be things that you're telling me in the numbers that, you know, all of a sudden you say something to me and I know, oh my gosh, that's a tax issue. Like all of a sudden you say, well, we had a conference in Canada. Oh, we got foreign activity going on now? Oh my God, I never knew that. You know, well, you know, Canada's it's just, you know, I have my people in Detroit, they'll do that to you in a minute. They're like, oh, we were just over the board. You know, that's another country. That's a whole nother set of.
Well, they won't let us in right now anyway.
That's true, I know, but sometimes you have membership that's coming in from the other country, but some things are not easily discerned from just looking at the numbers, and you need to have a conversation because the IRS form that we're doing, the 990, also asks about other compliance. Not just did you comply with the 990, did you also file these other forms? So I'm coming in and I'm going to ask you if you did all this other filing. So you want to make sure you understand what's going on there. So when you're talking about the financial reporting though, you do have to understand what that full set of accounting, full set of statements is, that we talked about. So, your bookkeeper, your accountant gives you that full set of statements, and now, maybe your CPA or your accountant is going to do the 990, and then here you are, you have the financials, and then you have the tax return. You're like, okay, so now what? You want to make sure that you can understand how the numbers on that financial statement look on that tax return, because one of them is financial accounting or accrual accounting. Don't get crazy, okay? And the other one is tax accounting. They're slightly different. We just got to be different than tax. We just do. So there are some things that are not put on the tax return that are on the accounting, and there are some things that are on the accounting that are not put on the tax return. There's a page in the 990 that does that reconciliation. And if you see in the notes, it's called Schedule D, part 11 and 12. Don't get crazy. Just make sure that if you're the person that's in that paragraph that we talked about, Angelina is going to look at the return with the outside accountant and one member of the board. Okay, so the three of us have to make sure we know how it got from the full set of accounting to the tax return, that the numbers make sense, that they reconcile. Okay, so that's all you need to know. Somebody needs to know how they reconcile. I'll sit there and tell Angelina, this is how they reconcile. And when she understands it, I'm like, check. Okay, she understands that that's what happened. If she doesn't understand it, we will sit here and we will tell her until she does understand it. Right, Ange?
Yes, the latter.
And you know what? And don't feel like you need to, it's not hard. I mean, usually it's only like a couple of things that,
Coming from an account.
stuff like, okay, stuff that you book on the return, like if somebody, like if I say, I'm going to do all your tax work for you for free, for pro bono, and you put that in your accounting statements, right? That doesn't go on the tax return. Stuff like that. It's not hard stuff. She got that in 5 seconds. Okay. So the other thing I really want you to understand is that if you are a 501c3, and most of you are, you're going to be filling out that functional expense page of the 990. And the thing here, and there's a picture of it in the handout that I'm giving you, it is broken up into 3 sections. It is broken up into program service expenses, management and general expenses, fundraising expenses. And since the return requires you to put your, say, you've got travel, okay, usually a big item. Total travel is $10,000. How much of that travel is for program services, programs that you were running? How much of that was the board traveling, management in general? And how much was for the fundraiser? So I want you to break out the travel in 3 different sections. So when you have your bookkeeper, she is going to code that travel A, travel program, travel management in general, travel fundraising. She's not going to say travel, because that just makes us go, oh, sweet baby Jesus. But so then we got to go through the general ledger, and we're by the hour, so you don't want us doing that. So you want to make sure that you are coding your accounts so that you can give me the information in those 3 categories. Okay, that's very important. And why is that important? Another page that's in there, because we have watchdogs and we need ratios. We're getting deep into the numbers now. But when you look at that financials, when you look at the tax return, one of the first things I do when I get a new client is I turn to that page where I see the expenses and I look at the ratios. How much did they spend in program service? How much did they spend in management in general? And how much did they spend in fundraising? And the reason why we're doing it is because we have watchdogs called Charity Navigator and GuideStar that look at those ratios. So if I have a new client and I see that they spent 45% of their total expense budget on program services, I'm throwing up a red flag. You want to see at least 50% of your money going to what you told me you were gonna do in that mission statement. So if you raised $1 million and you're only spending 450 on program services. I'm like, what did you do with the rest of the money? So they want to see, because we're thinking, I'm giving you this much money. What was that, $500,000 that I said it was coming in? And Angeline took the check and we went through the employee handbook and we made sure everything was put in there right. And the bookkeeper got the coding right and everything is good. And now you're spending the $500,000. And then you tell me you only spent $200,000 on the program? And that's because you just didn't code it right or you didn't spend it right. I don't know. What are you telling me? So that's why the coding is very important. And you want to make sure that coding is correct, because the watchdogs are looking to see that at least 50%. We like to see that number up in the 80% in that first column for program service. Administrative, management, and general expense, it can be anywhere from 0, which is like, okay, that means who's doing what? I don't know. Usually you have at least 5% to 30% at the max. If you're spending almost a third of your money on management in general, I would look at the coding, or I would look at, how you're doing your work, because that's a lot of money to be spending on management in general. And then your fundraising expenses. So we like to think that organizations are very efficient with their fundraising expenses. So it shouldn't cost you 50 cents to raise $1. That's kind of crazy, okay? So we'll take a quarter to raise $1, so 25% to raise $1. 25% of your expenses. So you want to make sure, if you're looking at if you've got your tax return right now, if you're listening to the sound of my voice, I want you to go to that page where it says expenses, and I want you to just do some quick math and see what is your total in program service, your total in management in general, and your total in fundraising. And if you've got like 80, 10, 10, I love you. You get a gold star, okay? If you've got, 85, 10, 5, wow, even better. But if you've got 45, 30, and then you got a whole, I can't even figure that out. That's so like foreign to me. I can't even figure out what the last number is. Then we're worried. We're worried. I would send up an alarm.
So give an example of a fundraising expense and an example of management. I think programs, probably everyone is pretty clear on program.
Okay, so a fundraising expense is really specifically, if you have a private fundraiser, that whole salary is going to go in that box. You can't do anything about it. I hired so-and-so firm to do the fundraising for me, and she said she was going to, be able to raise so much money. And that happens a lot because, you want a professional fundraiser. That goes in that last column, fundraising expense. If you're doing it in-house, the way to capture this, you got to do timesheets. So if Angeline is working on this, Angeline is doing fundraising, and she's doing management in general, and she's doing program service, she's got to tell me how much time she spent on each one, because I'm going to break her salary up. So if she's making 50,000, girl, you need to quit if you're making 50,000. But if she's making 50,000, and she's got all her time sitting in management in general and fundraising, she's the executive director. That may be okay. That's what she's doing. She only has 10% in program service because other people are doing the program service. That's fine. But when you come down to that total, what happens? So don't freak out because one line item may not be 80, 10, 10. It depends on what's going on. If she is really, her job is to fundraise more so than it is to actually do the program, she may have 50% sitting there. That's how much time she spends on it. But then you have things like, okay, what did the event cost you? So now you have renting the hall, bringing in all the food, all that. It's all going to go in fundraising. That's not going to go in conference, that would now be in the first column, program services. So the money that she's spending to do this conference, to do all this, that time, money is all going in program service. That's great, okay? But if she's sitting there really dialing phones and she's talking and trying to get, that tax return out to funders and all that kind of stuff, she's got to tell me I spent so many hours doing this. Then it goes in the other column. Okay, Charity Navigator, and I've given you the URL for that, and GuideStar. You can look up your organization because all the organizations are in there, and they have a rating from these watchdogs. And it would behoove you to go in and look and see what your rating is, because you can affect it. You can go in and say, hey, you know what? here's more information. They may say, well, we don't have their financials. Give them the financials, give them all the stuff, run the report, run all the stuff, see what they're saying, because you want to make sure that your funders are getting the full story, the full story of the numbers. So if you have 1 year that, everything blew up, and I'm telling you, this year of COVID, everybody's going to be putting some story in that thing. Everybody's going to be telling this story. So, get ready. It's going to be really heavy. So I want to wrap it up with really quick, because the other way you have to, another thing I want you to know is, like, I want you to look at page 6, I told you, right? I want you to look at that expense page. I want you to look at Schedule A. Schedule A is how you prove that you deserve to keep your tax exempt status. Very important page. If there's one page you've got to understand, or that you should know when you're in trouble, it's the Schedule A, the support test. And the thing you need to know, if you don't remember anything else from this conversation, is 33 1/3. There's a section on that page, and they will say, the IRS is saying to you, how much of your money came from the general public, because you are a public charity, and I've given you a tax exempt status. You are not a private foundation, right? Private foundations pay taxes. Private foundations are usually funded by 1 or 2 very, very rich people. That's why they're a private foundation, a family funded, some Gates Foundation, it's him and the wife. That's all their money. But you're a public charity. So you have to take that test. You put all the numbers in, the same numbers that the bookkeeper gave to me. And now I'm going to take it and put it in the tax return, the same numbers. They go on this page. And then I am showing that, yes, we got that $500,000 and we got all this other money. I don't care about the coding now. 500,000 or whatever else we got enough money. Yes, it came from where? It came from over here, came from over there, came from all these people. That may be a problem because that might come from a private foundation. So I'm not even going to get into that. But you want to show that at least 1/3 of your money came from the general public, which is a good reason why you have fundraisers where you try to get money from individuals. Individuals are your friends. So you may not think that it makes a big difference, but a lot of individuals giving you money is what the IRS wants to see, or a lot of small organizations giving you money. What they don't want to see is 1 or 2 funders. We will even raise a flag with you, because one funder taking the money away from you can actually imperil your organization. So we will say, you may have a going concern if you only have 2 or 3. Now, in the first 5 years of your organization, the IRS doesn't want to even know what you've got on the support test, because they understand you may only have 1 or 2 funders. So they're not even going to start asking you for this number until year 6.
Okay, I think that's really, really key for people to understand, so they're not in a panic mode, particularly for we're just starting now.
The IRS
not
gets
that
it.
Right now, because you're building, you're trying to
building
yourself and getting people to know who you are. And so the IRS gives you that.
They give you 5 years to get it up and going, which is why I told you in the beginning, don't start the clock before you're ready to start going. Did I not say that earlier? Because you're wasting years. Okay, so when you've got everything together and you know what you're doing, then you send that paperwork and you ask for that EIN and you create that organization. But you can do all this other stuff before you click that button and say to the IRS, start the clock, because they're going to give you 5 years. Now, year 4, year 5, you would talk to your CPA, your accountant, and you say, hey, what my numbers look like. Can you project? Like, this is what we've been made. So now I've got 3 years of history. I can say, oh, you usually get about this much money, and you get about this much from here and this much from there. So we can do a little projection and say, yeah, you're going to come out more than 33 1/3. Now, one thing I will say to you, the IRS does not want to take away your tax exempt status. That is the last thing they want to do. They want you to do this work. They will bend over backwards for you to do this work. They will give you ways to do this even if you don't make that 33 1/3. What they don't want you to do is to be, a fake about it. So there are rules, but the rules are to weed out the people who are lying and scheming and saying they're private foundations or public charities and they're not doing this work. If you can justify and show, hey, year 6, I'm at 27% coming in from everybody else. And I'm still getting money from like this one big organization. Like they're still running this place. So I'm still jumping at, they still got me. So we were like that at my organization. We had like 2 big funders, and we were trying so hard to get out from that because they could tell us what to do all the time. We had to do what they said to keep the money. So the IRS will say, if you can give me facts and circumstances telling me why I should keep this going, keep going, even at 27. And then you write down, well, okay, Angeline and Subrina and I, we were trying to raise money from this one, this one, this one. We have all these board members, and this is what we're doing. These are the programs, because now what did you do in the first couple of pages? You told them all these wonderful programs you were doing, right? You told them all this stuff. So you're not just telling your people, you're telling the IRS, this is what I do. Please don't take my checks and status away. So you tell them your whole story on this section, and the IRS will let you go. You can keep going as long as you have what we call facts and circumstances till you blue in the face. Actually, you can do it until you hit 10%. If it's anything more than 10% coming from the general public, even the IRS will shut you down. They're like, look, you got to get real about this, okay? No, you're not, get out of here. You're not a public charity. So make sure you understand that, 33 and a third if you don't understand anything else. And then last, other filings. The IRS is going to ask you on this form, did you file all your W-2s? Did you file all your 1099? They're going to ask you if you have a foreign bank account, because if you have a bank account with more than $10,000 in it, you've got to file. You got to tell the IRS, yep, I got a bank account over in Montreal, or I got a bank account in Slovenia, or wherever you got it. And they're also going to ask you if you were giving people the correct information about soliciting or deduction or charitable deductions. You were supposed to give them information if you have a fundraising event and you hold a dinner and you say like, oh yeah, okay, the dinner was $25, but you paid $100 for the ticket, right? Because it's a fundraiser. Did you give them the information that says $75 is the tax deduction because you got $25 worth of chicken? Okay, so you have to make sure that you're telling them, yes, I did that. So all those are on this 992. So, when I'm telling that conversation with you and you tell me, Angeline says, oh yeah, we're having a big potluck, we're having a big dinner and blah, blah, blah. I'm gonna say, well, okay, did you make sure that you got the, the solicitation, the ticket says that, let me see the ticket. And, is it on there? Did you send a letter when they said, thank you so much for your gift of $100, $75 of which is deductible for tax purposes? Was that on the letter? I'll ask you for a copy of the letter, copy of the ticket, because I got to check this box that says, yes, they did this solicitation. So all that is in the 990, okay? Not finance, but it's definitely stuff you need to know. Last, I'm gonna rush it up. Last thing, state compliance. State compliance. Generally, you have to tell the Attorney General of a state or the charity bureau that you're in town. If you're raising money, you have to tell them. Now, this is specifically because they are trying to stop scammers. You can't just say, oh yeah, I'm a public charity, ask people for money, and you're not really doing anything. It could take it'll take the IRS how many years to figure that out? 5 years. Okay, it'll take the IRS 5 years before they say, oh, wait a minute, we got the numbers now, year 6. They haven't been doing any of this, so the attorney generals and the charity bureaus will be on you every year if you say, I am going to raise money in your state. And usually there's a threshold, so you don't have to freak out. If it's usually it's like $5,000, it may be $25,000 in New York. You raise $25,000 in New York State, you got to file. So who are these people? Do you remember the Trump Foundation got in a lot of trouble in New York because they weren't doing things according to what the New York Charity Bureau said they were supposed to be doing in filing? That's the watchdog there, okay? Every state has one. New York they're vicious. Don't even mess with them. They will come and get you. DC is not, they don't play either. So make sure, Illinois is another one. California too, oh my God, yes. They can actually stop you from doing any more business if you don't file the paperwork. They will say, okay, you know what? You are not legit in the state. Stop. California, everything stops. You can't issue a check. You can't do anything until you file that state paperwork. So make sure you know what paperwork is required in your state.
Let me ask, this actually goes back to a question or a comment that you made in the beginning when you said where you're operating. Your operating state is where you are incorporated.
Okay, let's get those.
Or is it where you are?
All right, there are 2 different things, and this is a very good question. Usually the state of domicile, which is what we call it on the tax return, the state of domicile is the state where the organization was created. As Mitt once told us, organizations are people too. So the state where it was born, okay? So if you have the paperwork and you filed your articles of incorporation, your bylaws and everything are filed in the state of Maryland, your domicile is Maryland. You will have to register with Maryland if you are doing anything. If you're charitable, you have to, okay, yeah, I'm raising money. Most likely if you were filed, if you were formed in Maryland, you're probably raising money in Maryland, you would go to that bureau. Now, maybe that's where the paperwork was done, but now you decided to move your office to DC. This happens a lot here in our area. Now DC is where you're operating, and now here DC is where you're doing all these fundraisers and all this other stuff. DC wants you to file the paperwork. So you may have to file in multiple states. Some of my clients file in every state there is because they're doing electronic fundraising. They're asking everybody for money. They're doing national fundraising. Every state wants to know what was going on. You got to file a copy of that 990 along with the state filing in every single state. There are companies that do just that for you. If it's more than 1 or 2 states, you might want to think about having somebody else file those for you. And that's why we get that pressure from our side to get the 990 to the state filer, the state people, because they need to file that for the state solicitation and state attorney general to make sure that you are, compliant and that you are legit and that you can continue business in that state. So you have registration requirement, you have private fundraiser registration. And so if you have anything going on, like you're doing a silent auction, you're gonna have a bingo night, you're doing anything, you're doing a raffle, bells should go off in your head that you may have to register in the state to tell them that you're doing that, okay? In addition to what I was just talking about, in addition. So make sure you know. Now, if you're raising money from grantors, private foundations and things like that, make sure you know what states they're, if you're raising money from the federal government, you don't necessarily have to do this sort of fundraising registration, but there are places on your return where you're gonna have to say, I got so much money from the federal government, and that may even kick off a separate audit. If you get more than $250,000 from the federal government, you have to do another type of audit because the federal government wants their numbers their way. So all of that is to say, there are a lot of little bells and whistles that could go off in your head. Like I said, I'm giving all of this to you in the handout. I know it is a lot of information, but just know that you have some accounting that you have to do internally. Make yourself familiar with the 990 and see what it is that it's doing. You're reporting to the IRS, you're reporting to stakeholders, and you're reporting to people that you're telling your story. You're doing a lot of different things on that form. And then don't ignore the state that you're in or the state that you are soliciting in or doing programs in, because they want to know who you are too. Everybody wants to know who you are. So that's why you need to know the numbers, and that's why you need to make sure that you understand what's going on. So I hope that helps.
That helps a lot. And yes, it is a lot of information. I can attest to that, being the position that I'm in. And I know that because of the fact that a lot of our members they're doing the work, right? They're out there, they are, on the front lines doing the work. And sometimes you're doing the work and things fall to the wayside. And I just thought it was really important for us to have this presentation because we want to set folks up for success.
Yes.
Right? We don't want organizations, particularly any member of NNJ, to fail. We want to set people up for success. And so thank you, Subrina Wood, for doing this presentation during a very, very busy time for you, tax time, because you're doing.
Don't look behind my chair, because
there's a whole lot going on.
The mound of tax returns behind my chair.
Oh my gosh, I really appreciate you taking the time to do it because I think it is really important information, and we have this on record now, and people will be able to watch and go back and rewind and get all types of information, and folks will be able to get the handouts from me.
Yep.
Everyone knows how to contact me, and
My contact information is
your
in the
contact
handouts.
information will be there. You'll be getting calls. Hey,
You know what? Good luck trying to get me in the remote, but no, but definitely email, definitely email. The phone number right now, because we are working remotely, as you can see, this is my office right now. It is working. I will get messages if you call, but you might be the best way to do it is to email me, and I will definitely answer any question. Please do not stew, ask the question.
yes, yes. Well, thank you. Thank you again for doing this presentation on financial stability and accountability for nonprofits. And have a good night. And thank you, thank you, thank you again. I'm Angeline, and I will.
Okay, you guys get back out there, do all the good work, because I'm not gonna. I know.
You're doing the numbers work.
I'll do
Thank
the
you.
numbers, you do the other stuff.
All right. Thanks so much.
Bye-bye.